Hi, I'm David. I'm here to talk to you about cryptocurrency price analysis for Thursday, April 4th, 2019. Today we're going to talk about what everyone's talking about, the recent rally we saw in the markets. I'll mostly be focusing on Bitcoin, talking about what the next few days might bring, but also what this rally means for where we are in the larger market cycle. We'll also look at a couple of well-performing alts, Bitcoin Cash and Litecoin. My analysis of those will be along the same lines as Bitcoin, but there's a few things about each that make them stand out, and we'll discuss those as well. So without further ado, don't forget that like and subscribe. Let's get right into it. Okay, here we are looking at Bitcoin on the 1 hour for starters. And I don't need to tell you the big news, obviously. We've had a great run up here over the last couple of days. We just, in the last few hours, got rejected off of the $5,300 level, and we're currently consolidating around 5,000. We're going to see if we can, we're trying to decide if we can get or stay above that. There's some really optimistic, bullish things here. Even if we can't hold 5,000, there's multiple safety nets below us that I don't think we're going to drop back down to the 4,200 or anything in the next day or 2 days or anything, anytime soon. We have shown that even after this little dip, there was some serious support on the 50-hour moving average. We've seen a little bit of support at 49, well, not much support at 4,900, but a lot of support at 4,800. So even if we can't hold 5,000, I'm reasonably sure we won't break 4,800. And I'll actually zoom out to the daily because there's even one more safety net that I saw. There's the 200-day moving average coming down, giving us support about 4,600. We may not even get to that, but my point is that I don't think we have any immediate reason to think we're going to drop back to the 4,200 or lower level. There's a caveat to that I'll get to in a moment, but basically, let's assume we're going to hold around 5,000. What does upside look like? Where do we go from here? Well, first, of course, we have to retest at 5,300. Finding consolidation at 5,000 might be a really good sign because it might be us gathering strength to test 5,300 again and push through it. Assuming we can, the real level I'm watching, and I want to talk about in a minute, is 5,600 here. There's a couple of reasons. Now, before I go into that, I actually want to say this is kind of obvious, but the big one we're all eyeballing is the 6,000. Let's zoom out a little bit. 6,000 is the level that's basically the cliff we fell off in November, and we've been in this trough ever since. We need to get out above 6,000 to really say that we're climbing out of crypto winter. We probably are, but like that's the level I think everyone's watching to say like it's over. So back to 5,600. Why does this level concern me? Well, let's see, right here, 5,600. One, yeah, okay, we had a little bit of support and resistance there on the way down, true. And if you actually zoom way back to the previous run-up back in 2017, we see that 5,600 was a great like kind of shelf for us to get support on before we pushed through 6,000. That's a bullish thing. That might be what is about to happen again. 5,600 might, if we can get above it, prove to be like the level we need to hold on to then push above 6,000. But there's one more thing I want to talk about in relation to this 5,600 level. And before I do, I just want to say that what I'm about to say is not actually a bearish sentiment. It might sound like it for a second, but how can I look at a chart like this and be particularly bearish? But I do like to talk about, if you've been watching these videos, I like to compare what's happening to the previous market cycle, make some observations and comparisons just to give us an idea of where we might be at. So let's zoom out to the weekly. And usually when I do long-term analysis of market cycles, I like to go to Bitfinex, simply because they have more price history. There we go. Okay, so first let's look at where we are. This is the weekly. Here's the 200-week moving average. We've never fallen below this, to my knowledge. So even if we did dip back down to the lows, we'd probably almost certainly catch on this. But anyway, what I want to focus on, we just had a bearish crossover of the 50 and 100 week moving averages. This 50 week is dropping, and if we keep rising, we're going to have to test on it. Now, why do I think it'll be significant resistance? One, we've tested it in the last year, and we weren't able to get above. It also provided support. But again, what I really want to talk about is the previous market cycle. So let's zoom out a bit and go back. And here we have the previous market cycle. There's the run-up. There's the about a year of consolidation. Here's the lows of real crypto winter and the next bull run. Now, I've made a case before in a video that we're somewhere here comparatively. And so I think what we might be seeing is this run up here might be a corollary to the one we're seeing now, we had just had a bearish crossover of the 50 and 100 week moving averages. It was around the middle of crypto winter, and we had a run up, and we got rejected off the 50 week moving average, and that's when we took a pretty big dip back to retest the lows. And then after that, we easily passed through resistance that time, and that was the true beginning of the next bull run. Now, this is not a guarantee. History may not repeat itself. A few years have passed. The market's different. There's more people. There's different people. But I just think it would be irresponsible not to be aware of this. When you see a similar setup in the market, going back to where we are right now, at the very least, traders should be aware, and I'm sure a lot of them are, a lot of you probably are, about this 50-week moving average. We're going to test it at some point, and if we keep running up fast, we're going to test it kind of soon, and I just think we should be watching it very closely to see what kind of resistance it forms. To be bullish, I would say if we push above 5,600, that's a really strong sign that it'll provide support that we can then test and push through 6,000. So it doesn't have to be a bad sign. We have to watch and see what happens. If we can get above it, great. If not, crypto winter might see a few more months. All right, now I'm just going to go through a couple of alts really quick, see how some of the other big performers are doing. And first up, we'll talk about Bitcoin Cash, which by percentage did pretty much the best out of any coin in this recent rally. The TA I want to do on it is fairly tied to Bitcoin in the sense that I do believe that it's generally moving with the market, even if it's moving a little bit better with the market. And the other thing that makes Bitcoin Cash a little tricky is that it doesn't have as much historical price action, but we'll get to that in a second. Basically, just, you can see here the run up. You can see here we got stopped out at about 350 today, and we dropped back down, and now we're consolidating around 300. Basically, 300 is to Bitcoin's 5,000 right now, and we're seeing if we can hold on that. And like Bitcoin, there aren't as many safety nets, but I don't think, much like Bitcoin, I don't think we're going to fall all the way back down to before the run-up. We've got the rising 50-hour moving average. The other moving averages are behind that. They're all above where we came from. But also, zooming out to the daily, like Bitcoin, we've got the 200-day moving average coming down. The only thing that makes Bitcoin Cash a little tricky is where we're at now is kind of in a void of actual price action. Because in November, when we had the big dip, it coincided with the Bitcoin Cash hard fork. So you kind of have a little blank in here where there was no real market action happening while the fork was occurring. And before that, we don't have any levels like that because Bitcoin Cash came into existence during the 2017 bull run. So before that, its history is Bitcoin's history. That being said, basically, a lot of the stuff I said about Bitcoin I think applies here, even if we don't have actual levels. Clearly, the market is getting comfortable at about 300 right now. I think that's reasonable. And so, should we fall, we can see we do have the moving average coincides with about the 1 or 260 level, which does have a little bit of historical resistance there. So I would say for downside, if we lose 300, we'll probably catch on 260 at the lowest. And as for upside, if we need to get up to 400. There's not a lot in between. So other than maybe like some psychologicals every $10 or so. But 400 is to Bitcoin 6,000. That's the cliff we need to get above to get out of crypto winter. All right, last up now, I just want to touch on Litecoin. Here we are on the hourly. You can see the setup here is very similar to the other coins right off the bat. We ran up to 100, got stopped out at 100, and now we're consolidating around, looks like 85 right here. Like the other coins, there's some pretty decent support just below it at 80. We also have the rising 50-hour moving average, which would probably align about with 80. So like the other coins, I don't see us collapsing back down. We'll probably, for downside, I'd say we'd probably hold at 80. It'd be my best guess. But everyone wants to know about upside. Well, clearly our target is 100 right now. That's where we got stopped out. Like the other coins, we need to retest. But let's zoom out and talk a little bit more about what we see beyond that. So, one thing I want to point out, well, here we see here's where we are at 85. The reason for that support that we're consolidating on, there is some historical support and resistance at 85, even going back to before the last market cycle. So, but also I want to point out how Litecoin here didn't respond over the last year and a half the way that the other coins quite did. The year of consolidation after the last bull run hit it a bit harder, by percentage. And so when the crash came in November, from that point, it didn't fall quite as far as some coins. And as a result, it didn't have as deep of what I've been referring to the trough or like the cliff of crypto winter. It already got out of its trough, basically. Its target was $50 to get above that, and it did that a couple weeks ago. So we were already kind of out of that abyss when this run came. So if you look back to that year before that, it had a more staggered move down, and I suspect it'll have a more staggered move back up. So again, our current target at $100. After that, I haven't really marked it here, but I see basically every $10 being our next at least few resistance levels. So, and you can see there's been some like 110 here. We got some support and resistance, and 120, here 120 got some support and resistance. A little bit on 130, but it starts to become closer to maybe $20 jumps after that. It varies a little bit, but they become wider the higher up the number goes. So yeah, basically our current target is 100. We're probably seeing some resistance every $10 for a while after that, if we can get above 100. And if we get rejected, or if we lose 85, we're probably looking at 80. All right, that'll about do it for me again. As I always say, this is not investment advice. This is just my opinion. Go do your own research and make your own decisions. Until next time, don't forget that like and subscribe. Good luck with your trades.